Hey mom, how's it going?
I am having a great day, Lindsay. How is your day going?
I'm super pumped. I was just telling our guest today that when I was a kid, I used to be a car rider, right? Dad would drive us to school every single morning, and his one thing was that we had to listen to Mike and Mike every single morning. So I learned way more about football than I wanted to. But we have our own version of Mike and Mike today, so I'm super pumped.
I am
It gave
so
me a
I
giggle.
yeah, I was preparing for this and thought the exact same thing and thought, who in the world actually, but we're going to start something new in the insurance industry and we're going to have Mike and Mike go on the road and talk about all things insurance. So I'm super excited to introduce both of our guests today. We have Mike Wagar and Mike Strakhov, both from Westfield Bank. Welcome to the show, guys.
Thank you very much.
Yeah,
Great to
thanks.
be here.
Glad to be here. Always good to see you guys.
Yeah, do you guys refer to yourselves as Mike and Mike now? Like, is that a thing?
We're trying
Uh,
to figure out the best way. It's going to probably come down to nicknames or something along those lines. So
mhm.
there are other mics at the bank that make it even more confusing. So we got
Right.
to figure out. We got
Oh,
to figure out
so
the system.
Yeah. So the
so
CEO
people
of
can
Westfield
literally.
Bank, sorry, the CEO of Westfield Bank's name is Mike as well. It's Mike Toth. So, funny story, like about a week ago, we were all in an office together and someone came in and said, "Hey, Mike," and we all three turned our heads like, "What?" And this person said, "I just wanted to see what you guys would do." And we're like, "Damn, we fell for it."
That's funny.
It's like that insurance commercial. It was from a while ago, so I can't exactly remember what carrier it was, but it was the camel that would walk in the office and say, "Mike, Mike, 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 Mike."
Mm.
Like that's
Hmm.
you guys
Hump
now.
day. It was hump day.
Yeah.
So
Yes.
one of the things, I've been in a couple meetings at Westfield. I'm meeting a lot of people, as you might imagine, and um, someone referred to me as New Mike and Mike Waker as Old Mike, and I'm like, oh, we could do that. I'm significantly older
Yeah.
than Mike, but I'll
I
take that.
know.
So works for me.
I think that works. Yeah, let's
Yeah.
make sure that one sticks, right?
I
Well,
know.
Mike
I know.
Strackoff, I would love to talk to you guys because when I first started my own company, one of the first things I did was write an article and reach out to both of you to have you all comment on what's happening in the industry, what's happening from a lending perspective, all that good stuff. But to me, you were two very, very reliable resources inside the industry that had your finger on the pulse for me for many, many years. And while I know we're in an industry where there's lots of change, I really never predicted that my resource at one bank and my resource at another bank would now be working together. So tell me, what made you, Mike Strakoff, make that move? I'd love to hear that story.
Well, I owe a lot of the credit to Mike Wager because he was the one that was the catalyst for the change. But we've known each other for a long time. It is a small world in many respects as it relates particularly to financing in the insurance space. So we have talked a number of times, and I always was admired a lot of what Westfield has been able to do in the marketplace as it compared to kind of our product and what we were trying to do. And earlier this year, Mike and I probably had a discussion that was much more focused on, what are your thoughts on maybe joining forces? Not only myself, which was great, but a compliment to the team. So two others joined me in the move from the prior employer. So Ross Haskett and Morgan Harris, who've been a big part of my success and our mutual success at the prior place. And when we started talking about it, just the level of excitement around what we could do together was pretty obvious. By way of our relationships and what we've developed, there's a lot of overlap, but also a lot that we do differently with different folks and around the country. So same target audience, trying to do the same thing. In many respects, I think Westfield is, well beyond or ahead of the game in a lot of what they can offer. And that really was exciting to us. And, the upside, we'll find out what it is, but I'm very confident it's going to be awesome because the success we've had already is really starting to pan out. But would love Mike's thoughts as well
Yeah.
because he was a big part of it.
Well, yeah, it was exciting, as Mike said, Strakov. We have known each other forever, and insurance, especially insurance lending, is a very small world, right? I mean, yeah, there's 40,000 agencies, but I think there's something like 18 lenders across the country who actively advertise lending to agencies. So you kind of get to know everybody, and And I would see Mike and his team everywhere, and we've had a great relationship and worked on some deals together. And just, as we looked at how we wanted to grow Westfield Bank's presence, banking insurance agencies is our single biggest line of business for the bank. And we want to really grow that immensely here over the next few years. And I thought, well, let's see, there's a few different ways we can do this. But my first phone call was to Strakhov to say, hey, what would you ever think about this? Because I think together, we could make some pretty good things happen. And so the conversation kind of went from there, and here we are, mid-August. Mike and Ross and Morgan joined the team, and now we've essentially doubled the size of our team and doubled our capacity. And I think the way that we go to market, not only from a lending standpoint, which is what we lead with a lot of times, but the premium finance, the deposits, the private banking, all those things that we can help kind of bring and round out those relationships. We can take over the world next, I think, with some of these things. So it was just a great opportunity to get a lot of great people, and that's the key about it. Carey and Lindsay, they're great people, and people are the key to the success, and people are the key to the growth and what we want to accomplish. And we couldn't ask for better teammates to join us. So super excited.
Yeah, I'm really excited too. I will tell you, I've had some clients reach out and say, "Hey, I reached out and now the mics are together. What are you doing?" And I'm like, "It just makes it easy. Those are the people I refer to. It's just easy. I just send them where they are." You did get a dream team though. Like Morgan might be one of the most talented people. I don't have as much experience with Ross, but I've heard fabulous things. But man, what a dream team to pick up. I don't know if
Hmm.
you remember this, Mike Wagar, but you and I were on the phone talking about one of our clients, and we were talking about the need for talent, need for
Hmm.
people that
Hmm.
understand finances. You're like, "Hey, if you know anybody," and I'm like, "Hey, if you know anybody, I'd like them." And somehow you won here. I don't understand. It's like,
There's
Yeah, well,
serious slim pickings out there.
it
It
is.
is it is good, and this kind of aggregates a lot of that in one place. And there's a lot of positives to that. And one of the things that we had talked about as a group is that we got to make sure that if we're going to move in this direction, there's a lot to be done. We're going to get there, but let's have some fun in the process. And I think winning is fun,
mhm.
and winning more is a lot more fun, and that's the plan. So I think it's a great recipe for future success. And we're like 8 weeks into it, but it's been a great process so far, and we think we're just at the beginning of scratching the surface of what's to come. So we're really really excited.
So I want to play a little game because we're in the business of everybody wants to know what's happening in the market. And I know you probably get asked this as often as I do, if not more. Like, what's the going multiples? How is the market impacting it? All that good stuff. So I want to look back at some of the predictions for 2024. If you were at the end of 2023, there were a lot of people that were questioning what was going to happen in the marketplace in 2024. And by and large, most people said, we think the market will remain strong. We believe that multiples will remain high for agencies that are well run. But because interest rates rose, we believe that the due diligence will get much more tight, and those that are not well run maybe wouldn't command the same multiples as the other. There would be a little bit of a divergence. That's what I saw. I actually went and did some research for this to say what were people saying, because they all
Hmm.
changed their tune as well.
Sure.
So tell me, is that what you guys are actually seeing in 2024? Was the prediction for 2024 accurate and aligned with what you guys have been experiencing this year? Either one can take it.
Yeah.
Go ahead, Strack. You take this one. Restart.
So I'm rarely quoted, Carey. So I really appreciate you quoting me on that lead in about all my predictions. But I would say a lot of what you just said is true. I think those that are active are being probably a little bit more selective. Due diligence probably a little bit more. You've seen the deal volume drop. At that announced level, those larger private equity, slash public company, large private type acquisitions, just the volume and number of those that have gone down year over year, and this year included. So that certainly has happened, but there's been some, blockbuster deals, some really big deals. Private equity is kind of still has, that I love the term dry powder. It sounds like it's just, a lump of money burning a hole in the pocket, looking to put it in the right place, but that's certainly happening. The one thing that I am encouraged, I think one of the other predictions too is that potentially valuations could start coming down because of the due diligence and interest rates and availability of capital and all that. I think deal flow is actually, I would say at what we do at our level, it's been strong. I mean, it continues, and I think that's been, super encouraging. I wouldn't say I've seen an incredible amount of downward adjustment on valuations. They seem to be holding true. And I think when we've spoken in the past, and one of the things I'd like to say is that we're in the affordability business. So whether interest rates are high or they're low, we're cash flow lenders. It's got to make sense from a number standpoint, and that doesn't necessarily get swayed too much by market. Market value, if you will. If someone's willing to pay a high number, it just doesn't work for us from a cash flow standpoint. Then facts are facts, numbers are numbers. So that really hasn't changed all that much from my perspective.
Yeah, I'll just, kind of add on to that. Multiples are still strong, and we haven't seen any deterioration of that. And you'd think, from economics 101, if interest rates are high and capital is more expensive, that you'd see some of that slowing down. And I would say, if anything, we've seen more of an uptick in some activity. It feels like there's a lot of momentum going on. One of the things that I was at Best Practices convention maybe just before 2023, and as rates were starting to go up, and I was talking to someone from Reagan, and we were just saying, hey, it feels like a lot of PE guys are on the sideline for the time being because the cost of capital has gone up. So it's an opportunity for the independents to kind of get back in the game, if you will. And we have seen that. We have seen some people, some independent buyers who were on the sidelines saying they don't want to compete with PE, get back into it. And so that's been encouraging to see that too. And even with the higher interest rates, we haven't seen anybody walk away from a deal because the rate's been higher. If it cash flows, it works, it makes sense, they were willing to pursue it. So I have seen PE kind of come back in a little bit. There's been 2 blockbusters, as Strack mentioned. And I think they're not going anywhere because there's still a supply and demand issue. There's a high supply of capital out there and a high demand for buyers. So I think that you're going to continue to see some of the same things we've seen. And now one thing that could change the landscape a little bit, not necessarily from a valuation standpoint, but the last presidential election that happened in 2020, with the outcome that happened, there was a flood of deals to try to get done based on the specter of changing capital gains rates. And you could see that again going forward too, if depending on how the election turns out. So
why do you think that there's an uptick? Because honestly, it did kind of defy what should happen in the marketplace. Like if interest rates go up and money is more expensive, and some of the top PE buyers went on a complete hiatus in the beginning of the year. Like you see the top buyers, like the numbers shifted big time. I'm not saying they didn't come back into the market, but it definitely disrupted not only personal lending, but the PE that needed to recapitalize. Tell me why do you think, from an environment standpoint, why do you think deal flow is still so strong, and will it continue to be strong?
I think a couple things. Insurance is a really, really great business, and it is a very resilient business. So through economic turmoil, ups and downs, pandemics, insurance is there, and it's not going anywhere. So I think the resiliency of that business sector is attractive to a lot of investors. So even when PE goes on the sidelines, there's others who seem to pop in and say, let's see what we can do here, because there's some really great cash flow out of it. So I think the resiliency, the attractiveness of the cash flow is there. And then, again, it's a great business that you can earn a great living in, and you're helping a lot of people. So I just think the nature of the business attracts a lot of buyers and attracts a lot of attention. For us, it's a business that as a bank, we believe in very strongly, because we have seen that performance, and insurance isn't going anywhere, right? I mean, we all need insurance, home, personal, business. Nothing happens without insurance. And so even through hard markets or soft markets or, carrier changing appetite, the business is there. So I think because of that, that's why you're going to see continued strong activity with it.
Yeah. The other thing I would add to that, Carey, if I could, it's interesting we kind of lump everyone in that kind of private equity bucket. Everyone's a private equity buyer, but I think the type of private equity, like you have long-term horizons versus short-term horizons. And I think the folks that see this as a longer-term play can play out the interest rates that are, considered quote unquote high, historically not crazy high, but, I guess near recent history, much higher than they've been. And I think now, I don't think anyone thought that this was going to be the status quo moving forward. So, I'm going to have an asset in a declining interest rate environment. I think some more people are going to be back on the horse and looking to acquire, and just saved up that capital for this moment. So I think it's going to take up even further.
So I actually think there's been a fair number of people that, ran solid agencies that viewed this as a great opportunity year because the pressure has remained high because of staffing. I mean, that started with COVID and it hasn't let up. Like, if you're not willing to get creative with your staffing, that's one of the biggest factors that's difficult for someone who's trying to hang on and might push you out of the industry and say, maybe this is the time, right?
Sure.
And then add the hard market and the increased volume of work that's been created by the hard market with the staffing pressure. It's created this opportunity for those that actually have a great infrastructure and use technology and whatever to say, I can acquire and potentially get someone that might be under a little duress, but win in this marketplace as a buyer. I mean, I don't know if you guys collect this, but we do as we're doing valuations. Why are you getting a valuation and what's causing you to, we ask a lot of why questions because we also want to make sure we're valuing it the appropriate way and we understand what the risk factors are inside the agency. Are you asking why certain people have decided now's the time in your process as well? And is that tracking the same with you all?
Yeah, I think it's particularly from a lender perspective, why someone's selling the business is always of interest, regardless of marketplace. Are they,
Sure.
If you're 40 years old and you're selling your agency, it makes you wonder what's their next step. And there's a lot of things that we try to anticipate in general. Mike alluded to it that, sometimes it's things like, the potential for capital gains tax can push a bunch of deals into the marketplace. So we are always interested. I'm not sure, to the degree, we're actually tracking that in any type of way to kind of regurgitate it. But there is still a aging aspect to agency owners. There's still, those that haven't embraced technology, might be falling behind the curve on those pieces and don't want to reinvest in the business. But I do see, generally, the reasons to sell being somewhat consistent to what they have been. And with multiples being what they've been, a lot of sellers have realized now is the time to maximize value, and have picked a point in time where they think that's the case, and choose then to sell. And I think that's still going to be the primary reason or motivation.
Yeah. Oddly enough, it's like some owners almost have FOMO. They hear these high multiples, they see these things going on, and it's like, man, I better if I'm thinking about this over the next couple of years, maybe now's the time to do this. And they don't want to miss out on some of those higher deal multiples. And we've tried to counsel people like, if you're running your business well, you don't need to have the FOMO. Just keep doing what you're doing and everything's going to be just fine. So, but I do think it's some of the stresses of running a business. And there's some people who become agency owners who would rather be a producer and not worry about all the, managerial and administrative things. And if they can partner with someone to do that and they can still produce, sometimes that's attractive. So there's a lot of reasons. So I think the why is something we ask a lot as well. We don't have a database of the why answers, but the anecdotal evidence that we've been able to pick up over the years has been pretty cool.
So, Mike Strakhov, you said something a bit earlier that I'd love to kind of double tap on and talk about a little bit further. You said that the market right now gives independent agents a little bit of wins. It gives them a step up above PE-backed buyers. What do you think that people who are looking to grow by acquisition, what can they do right now to prepare and take advantage of that market advantage?
Yeah, so the folks that are looking to acquire, at times I feel like I'm a broken record. A lot of this is fundamentals. If you're looking to acquire and even looking to sell, a lot of these comments kind of go both ways. But if you're looking to acquire, running your business like a business, showing, the profit, necessary to show that it is a viable organization that's growing, that, you have a plan, you have what you're going to do in 24 and beyond. So showing the resilience that we've talked about is super important to make sure that you're sticking to the fundamentals. Also a big advocate, and I know Carey and I have spoke probably at length in a couple joint scenarios of just making sure that you have a plan. Like, what is it that you're looking to acquire? What's that look like? What's the profile? Making sure you're true to yourself on, I want the agents in this county or this state or, this part of the country that are property casualty. You could just map out exactly what it is and stick to that. You do see some people that kind of fumble around and act on deals they find. But might not necessarily be the best deal for them or the best fit, or could be something that's incredibly challenging down the road. And this is a retention game. If you're going to be in the acquisition game, you really need to focus on what is it going to take to make sure the asset you buy is there a year from now and beyond. So, having a plan, having a process, sticking to it, and taking the time and thought beforehand to do all that, as opposed to trying to do all that all at once after you find a deal, is going to be a lot of work, a lot of frustration, and greater potential for there to be a problem. So that's my 2 cents, and I'm sticking to it.
What about you, Mike Wagar? Do you have any other additional things you would add to that?
I mean, Strack did a great job of going through that. It's why he's part of the dream team. So no, I mean, yeah, I'd echo all that. I mean, if it's all about planning of what you want to do and what your strategies are, and the variety of speaking engagements that we all do. I think that's a common theme. So if you got the infrastructure and you're ready to be a buyer, be prepared for it. Get your financial house in order, work with your team, have a plan, and go. And similarly, if you're looking to sell or transition, in the next 3 to 5 years, what does that look like for you? I always have counseled folks, and you have to kind of ask a few questions of what do you want, and when do you want it, and how do you want it? And if you can answer those questions or map those out, then you can work backwards to structure really any kind of plan that you want to. It really comes down to what you want. I mean, the greatest thing about this business is there's 40,000 independent agencies, and we have yet to do the same deal twice, because they're all different. Cultures are different. Wants are different. And so, our job is to help them prepare for whatever they want to get that. And that's a lot of fun.
So I get asked this question a lot, and I'd love to hear your thought process on this, because I have a couple of actually my fractional CFO clients that their strategy is, I want to grow organically and I want to grow by acquisition. And I want to do 3 acquisitions in a year or 3 acquisitions over the next 5 years. Tell me, if someone is in that process and that's their mindset, that's part of their overall strategy, is there something that they can do to come get pre-approved? Or if they know they're going to have multiple acquisitions, I'd love to hear you guys, because one of the things I love about both of you is you've always approached this as being a partner. We're not here to do a transaction for you. We're here to be a partner in your overall process. So talk to me about the pre-approval process, and someone who has that strategy, what should they expect? And what does that look like? Actually, we're going to start with Mike Wagar on this one, because
all right.
I keep starting with Strakhov.
That's all right.
Which is unfair. I'm not sure why. Anyway, yeah.
Well, he comes before me in the alphabet. That's why. So it's S before W. So it's all right. Yeah, we do that a lot. And that's part of the partnership and the consultative process of, what is your plan? I want to double my revenue in 5 years. I want to make 3 acquisitions over the next, 2 years, whatever it may be. So we'll start working with a client and look at their financials and say, okay, as you sit today, here's your borrowing capacity. And let's go through that, what that looks like. Now, when we look at acquisitions, we underwrite those in what I call an A plus B equals C model. So you have your buying agency, the partner agency, and what does it look like together? And that's the C. So every time they grow, they essentially increase their buying power as well. So in a process like that, where someone wants to make multiple acquisitions over time, you can kind of revisit that after every deal and say, okay, your borrowing power went from $1 million to $2 million, and now it's going to go to $3 million. And so we keep, looking at that along the way. And we've done that with multiple clients. The other thing that's really key there is your pro forma. So have a really good pro forma plan to say, okay, here's what we look like today. And if we make these deals, here's what it's going to look like. We know we're going to need to adjust staffing. I need more licenses for my management system. I need to increase marketing. There's probably some carrier development expense there. So having that pro forma in, because one of the first things we look at after that first deal and everyone comes back is saying, okay, well, how did that first one go? So can we track that? Did you accomplish what you thought you were going to accomplish? Or did you exceed it? Or did you, fall short, and why? So it's maybe a long drawn out answer, but I think we have those conversations all the time. And that's where that partnership comes in. I mean, we are arm in arm going down that pathway and checking in at multiple stops along the way.
And if I could maybe just add to that, just one little comment, like any good partner, we're also a reality check. And, I want to be $1 million, and I want to be a trillionaire and retire when I'm, 45. And none of that has happened. But, we all have our wish list, but growing in a responsible manner, in a way that, you're not over leveraged, you're not putting yourself in a bad spot, and setting expectations around that. I think that in and of itself can be helpful. Just that people understand this is the plan, but how does that work in reality can be a good check-in for folks as well. And I think talking to a lender, if that's part of your strategy sooner than later, is a good part of it. Just to understand what that process is, what it looks like, and what's important to us to make decisions can help them make better decisions in the future.
Yeah, I totally agree. I love the fact though that it's a long-term vision, not necessarily one at a time. So if you get a partner and you get someone who's thinking that way, certainly that's one of the things that I work to help someone say is if your own profitability is strong, then you're going to be a much more competitive buyer than someone who hasn't done the work to get your own house in order, and you're going up against another buyer that is. Like, just the math will be different in those two situations. So I know you guys talked about it a little bit, but I think it would be really nice, because we're being recorded, that we should all provide what we think our 2025 predictions are. Is that fair? Because listen, on the Mike and Mike show, they always say what they think's going to happen and then come back and revisit it. So we are setting a precedent here. Mike and Mike, you heard it here first. What do we think 2025 is going to look like?
Are we going to work off a spread, or is it win-lose? Is it very polar?
Oh, listen to Mike. He wants to win.
Right. Yeah, that's right. I love it.
Oh, my goodness. That's fantastic. Oh, my God. All right, Wagar. So tell me what you think your predictions are for 2025, and then we're going to make Strakhov say his as well, okay?
Okay. So a couple thoughts. I mean, I think we're going to see some continued decrease in interest rates. So I don't feel like I'm going too far on a limb there. I won't say how often, how much, or the frequency of it, because I don't know. Every time we've bet on that, we've been wrong. But I do think we're going to see some relief on the interest rates there. And look, I think we're going to still see continued activity. If anything, I think there's going to be a slight uptick in consolidation and activity. As rates come down, capital becomes more affordable. We've seen some PE guys who were on the sidelines come back in. But I still think there's a great market for independent agencies, privately held, to go out and acquire and grow and do that. There's a great market for it. I think multiples will stay pretty consistent. I don't really see them, retracting much. If anything, I could see them going up a little bit. So I think that's it's probably a boring prediction that it's like more of the same. But I really don't see anything, even with the hurricanes and the claims and carriers are having some hard times. I think it's going to be another year of strong activity. You heard it here first.
Yeah, I know. Mike Wagar, you heard it here first.
On the record.
Yeah, if I was to give you mine, this might be one of the first times in your recent history or memory that I'm speechless, because I would say very, very similar to Mike, and not to reiterate those points, but the things that are the variables, which maybe I'll from that perspective is this presidential election. What happens there? What is the dialogue around capital gains, what we need to do there? It makes a very difficult voting process for me, because I have one thought on why I would vote this way and another one that way, and some might drive deals into the marketplace. So it is going to be very, very interesting. I think it's going to be telling for a lot of things, and it could be even interest rates, the economy, and capital gains as being part of it. So I would say that's probably the wild card that would maybe adjust some of the things Mike said there. But I would feel 100% comfortable making the same statements Mike did with regard to predictions.
So I have one follow-up question. Do you think, because there's also some predictions that they think that the market will soften. We don't think it's going to completely soften, but we do believe in the next 12 to 18 months that there's already some signs that hard market will soften in places. Do you think that that will have an impact on any segment of the industry? Because many agencies are seeing the highest revenue levels they've ever seen because of rates. So you tell me, what do you think? And is it a segment of the market, or is it wholesale that it might have an impact on?
Mike, do you mind if I take a stab at this?
Go ahead. Go ahead.
Yes. So I think, probably what gives me comfort is that it's not a light switch. It's not all of a sudden soft market and things drop by 30% for an agent. Usually there's a softening. So it's a process, and it kind of allows, an opportunity for people to adjust if that's going to be a downward shift in revenue over time. I think when it comes down to hard market, soft market, it's going to be one of these line of business type moments too. Like, comp might be softening, GL might be softening, but I think, commercial auto and likely property is still going to be a problem based on a lot of things that we're seeing right now. So I think, you might have softening in certain lines, but I don't see it as a, complete softening of the insurance market. And I do think it's going to be something that happens over time. It is something that we talk about, is that, is someone growing because of customer count or, policies in force? Are they growing 100% on hard market, and actually their customer count could be declining, or they could be losing policies? It could be masking some things in an agency that are going on that aren't healthy, that would likely come to bear, in a truly softened, or, if it gets to that point, truly finalized softened market, if that makes sense.
Yep.
Yeah, to build on that, I think you can see the signs of softening, but the wide majority of agency owners I've talked to recognize that their revenues are high because of that. And they're like, I'm making more money without necessarily adding clients. I'm working harder to make this money because I'm quoting things and trying to shop for it, but we can see the uptick. And so I think most of them are realistic that that's not going to continue, and it's going to come back down a little bit. But to Mike's point, you're not going to see it drop off a cliff. It'll be over time. And again, that's one of the beauties of this business, is you don't see a ton of gradual, or severe upticks unless you write a bunch of new business. You don't see a lot of drop-offs unless you lose that business. Market conditions generally are very subtle.
Yeah. Wow. Well, I really appreciate both of you coming and sharing. You guys heard it here first. We're going to definitely revisit these predictions and make sure that we all were accurate. But I would agree with you. Like, listen, if something doesn't change the retention or the predictability and the strength of this industry, then there's no reason to think that multiples are going to drop. Like that's my 30-second stay. And as soon as something like that changes, that actually changes what we all believe will be true on the future performance of agencies, we are going to remain a very, very good investment, and therefore multiples will remain high. And there's always going to be more buyers than sellers, especially because so many people want to grow by acquisition. So, and again, if that changes, if there's more buyers than sellers, or if there's more sellers than buyers, maybe that would shift it as well. But I've yet to see that, and I'm sure you guys haven't seen that either. So until those two things happen, it is going to be more of the same, unless something external changes that, like interest rates or, crazy tax laws or something. But Anyway, well, I love that you guys spent the time with us. I look forward to spending time with both of you and seeing you out there, hopefully presenting together as well. So thank you for coming and sharing with our listeners. And I'm sure this is not the last time you will be on the podcast.
Well, thank you for having us. Enjoyed it.
Yeah, thanks for having us on. Carey, Lindsay, always great to see you guys. We appreciate your partnership and all you do for the industry, and always happy to do this. This is a lot of fun.
Amen. Thank you both.